Good day. This is the Elliott Wave weekly update for gold, silver, and platinum being recorded on Saturday, April the 19th at 11:30 a.m. Pacific Daylight Time. I'm beginning here with gold, and it continues to just power higher. And so I'm going to pull it out real quick to the maximum monthly chart. And essentially, you can see that we were in a C wave, but I understand that a lot of people have a problem with it because we are taught when we learn Elliott that corrections are labeled ABC, impulse waves are labeled 1, 2, 3, 4, 5. So if it is going to be important, then I can change this to cycle 1, cycle 2. But my reasoning behind doing this is that it might actually be a cycle degree impulse wave up. And that would then put us into a cycle degree ABC down. And because I'm not taking it above cycle degree. So in other words, if we were to label 1, 2, and then we get 3, 4, 5, at that top, that finishes that cycle. And then we're in another larger cycle, which could take, and again, a corrective phase that would cover the entire period of the rally to correct. And maybe it'll come in 3.382 in terms of a Fibonacci time cycle, et cetera. So to me right now, the wave pattern that's going up, whether it's a cycle 3 or a cycle C, carries the same personality and characteristics of a C wave or a third wave, because they are, as you hear me say, cousins in terms of what that pattern is going to produce. And right now we're in a 3 of 3 of 3 of 3. This continues to subdivide on the way up. So it is truly, my underlying message here, it is truly a very large, powerful rally. And it's being fed by a continuation, now being fed by a continuation of negative factors that push gold higher. The primary one that's kind of kicking in now is, again, the dollar. And what we're seeing in terms of what's happening in the dollar is due to what the United States' position now has been taken, or is being taken, in trade wars. And so the United States, and just in other things that we're doing, pulling out of agreements, pulling out of the Paris Accords, pulling out of all these international agreements, pulling out and closing now consulates in several places around the world. It just changes the status of and the standing as the United States continuing to hold on to the international currency of trade. So in advance of that actually flipping or switching, we are seeing sale. The dollar is being sold. So I think what's actually happening, if we go take a step behind that curtain, we can start to figure that a lot of countries are beginning to sell their dollar holdings in favor of trade with another country, with the Union or European Union or other countries where the dollar is not necessarily necessary to have to produce that trade or to pay for that trade back and forth. So in other words, if Canada, which they are, is selling the US dollar in favor of the Canadian dollar, well, that part goes on, that's what is happening. But it's because Canada is now securing trade deals that the United States is trying to tariff between our countries under the North American Trade Agreement, which was actually put into place way a long time ago. I believe it was President Clinton that actually put that into place, or maybe it was even started prior to that. I don't know. My history is kind of, not there in terms of pulling that date out when it happened. But underlying that, with these tariffs against Canada, we've heard a lot from the Canadian government, the officials, the premier, all of the different provinces. we're starting to hear from them in terms of they're looking towards other areas on our globe to form and put in place trade agreements. The United States, you don't want to do it, we'll find other countries that will. So that can be happening. And so that puts pressures on the dollar. The lower dollar continues to fuel the rise in gold. Now, so are we going to see, and again, what if we see a switch? Because right now, gold is the international currency of trade for, not gold. The dollar is the universal currency of trade for gold. Now, yes, gold trades in euros, gold trades in yuan, gold trades in rubles, those, because that all gets changed. But it goes from dollars to those. So are we going to start to see that change where there's less dependence on the dollar in dealing with gold? That hasn't occurred yet. So the lower dollar is fueling the higher prices in gold. Also, I believe that the political pressure that the tariffs is putting on a global stage is also bringing back a little bit of shine. I know the pun on gold as the move, flight to safety. That people are not going to trust their dollars to be in the U.S. bond market. So we're not seeing that flight to safety on the danger of the market just putting in a very stronger decline, the U.S. markets. And so, but we're not seeing that move. In fact, we're seeing them selling bonds. And why are they selling the bonds? Well, because the larger holders of the bonds, i.e. China, i.e. the European Union, i.e. all kinds of areas around the world, are deciding don't want those anymore. The confidence in the good faith and credit of the United States is getting chipped away. And by the actions that are happening with the current administration. So that bodes well for the price of gold continuing to go up. And that, as I believe, is why we're continuing to see just this powerhouse move that just doesn't seem to end. But it is following Elliott, I have to say. What's not, though, and I'm going to get into that in just a minute, is that the declines or the pullbacks are not as strong as we're thinking they should be based on the size of the move that needs to be corrected. That's that pressure being put on owning gold. All right, so even if I'm going to leave it here, AB, we're in at least a cycle degree third wave or cycle degree C wave, and within that, primary 1-2, intermediate 1-2, minor 1-2. So at best, we're now getting ready to maybe complete the, minor 1-2 and then minute 1-2. We may be getting ready to complete minute wave 3 up here. Now, let's kind of go in and take a look. So this is that one. I'm going to bring it down to here. And actually, wow, I got to take it out and put it on a daily before I can start to get. But we have minute wave 3 up here at 3509. So we have, there's minor 2, minute 1-2, minuet 1-2, minuet 3 is not even in yet. So we've seen that, and then we saw sub kind of go in, and then that fifth wave subdivided. So this fifth wave in this degree just finished, and that then finished the fifth wave on this degree. Let me get this all down here, boy, because you guys got to see this. There we are. So there's the 2, and that's the third that's finishing up here. So we had 1, 2, 3, 4, and then it's subdivided again. And this fifth wave was super powerful. And then the fifth wave of that subdivided into its own 5. So we just have had a extremely powerful move from 2622 or 2600 up to the high at 3372. And by my count, upside's not done yet. We have so much more to complete if my count is to be read correctly. Right? So all we've done is completed the third on this degree, which if I pull it out, let me just pull it out. The third on this degree, which is the sub-minuet. So when we're done with that 3, we're going to come down in a 4, which right now, if we're just using straight fibs, 382 is 29.96. 0.236 is 31.40. Let me bring this back down to just our regular daily. What do we got in between? Well, we have this fourth wave at 32.09. That's going to come into play. Then this is the next 4, which would be for the fourth wave for there. So, and then in between, we should find support at 32.90. And then we have additional support at 32.05. And then we have that level there. So this is what I'm talking about. We're finding the support in between these absolute surges higher. So again, we did a correction last week. I think we reached this low on Friday, it says, and that would have been at 32.96, so just below 3,300, and it closed back up 40 some odd points above that low to finish at 33.41. So can I expect either that's A, this is a small B, we're going to come down. We can kind of take a little bit. Let's bring it down to the 4-hour, and we'll start to see if we can't get inside this thing. A, B, C, maybe. Now, if that completes the 4 inside here, right? This level 4, wow, not much. We need to, so I'm thinking A, a little B, and we're going to come back down and get to there. But what's happening outside of the markets with our courts, with the current administration, with the trade wars, with the ceasefire agreements, with all kinds of things that really do affect the price of gold. We really have to start thinking that our pullbacks are going to be much smaller. I mean, this was pretty good. That day we saw the high at 33.47, the low at 32.96. It was down like 50 or 60 bucks, and then rallied right back. So again, not sure. I can say, hey, this is where the marker would be, 32.08 to 3,200, but we're not getting past on a 4-hour chart our moving averages. And if I bring it down to the hourly chart, you've got higher. See, moving averages also very higher that are not necessarily reflecting. The 50 on the hourly is just starting to go a little bit flat. The 200 is still angling pretty strongly up. So again, and this small 5 waves in terms of the larger picture was powerful. This took it from 29 to 32. And it just powered. A lot of pullbacks in there, but powered, just continued to power higher. And then we saw it again up to here. Now we're pulling back, finishing all the way up to there. But if that's the 4, then we're going to power. And I'd have to be looking. Wow. If I had to pull this open, I got to go back out a little bit, folks. That's the 2, 3, 4, 5, and then 3, 4, 5, and then it would be here. And I would have to go and look. I got to go out even further. Wow. All right, so now I need to get this wave 1. And if I do, and I pull it all the way up to here, that it just would be an incredible strong, right? Look at the size of that first wave. And what I'm going to be connecting, right? I've got 1, 2. If this is 3, there it is. Then I'm looking for that fourth wave. And I would hope it might get back down to here. But if that's as far as it's going to go and we start breaking to new highs again, wow, then I got to go inside here and pull it all the way up to here. And we definitely would be looking at 34 to 30, 34.61 to 35.10. And could the market do that? It absolutely can. Don't forget, this is new all-time highs. This is to say, well, that's good resistance. I'll sell there. It's like, why? So that really becomes a question. What's going to produce a pullback? First of all, the dollar turning and going up, but there's enough pressure on the dollar that it's having a real hard time getting back above 100. So it continues to sell off. And if we look at the dollar, those charts are looking just the opposite of here. Like there should be way more downside. And that could kick in, excuse me. And what if the dollar gets down to 85? Now, granted, and that's a whole nother chart and it's a whole nother set of analysis, but let's just take a look. And pull this out to a long-term chart, right? If we're in a third wave down, minor 1, minor 2, we're in a third wave down. These levels, we got 95 down to 94, but they coincide with a C wave, a primary C wave. So I'd have to pump this up to intermediate wave 1, intermediate wave 2, and then adjust all this. And if that's the case, we're looking at an intermediate third wave to bring it down to 95, possibly. A little bit further, 85. And that just puts that C wave down in the air. So a longer term, powerful sell in the dollar. I'm going to go all the way out to all the information that I have. You can see this is 2009 where the dollar got down to 70. Are we ready? Our equity markets, by the way, some of them do have fibs taking us back down to those levels, to 2008, 2009 levels. Is that the same direction that the dollar's headed in? On a cycle degree? Could truly the trade wars and all the fallout from the trade wars and earnings and everything else that's going on internationally against us, because we're against them, could the dollar just really kind of collapse? And what would that create? So again, I'm not saying that that's what's going to happen, but I'm saying if this is the count, then we are looking at 85. First stop would be 98. Second stop would be 95. And those are pretty big moves to get there. And then if they continue to sell it hard, well, then we're looking at 85 on this intermediate level, because I would change this to intermediate degree. 85 for just the third wave. And then a 4 and a 5, and then God knows. Now, if all stops, if all becomes resolved, if the courts get a hold of the current administration and say, no, we're going to start, you must comply with the decisions of the court. If the current administration continues to go, no, we don't feel that we need to do that. So we're starting to see the Supreme Court weigh in on some of these, like not allowing the deporting people on that Aliens Act from the 1800s. So that's been put on pause. Just put on pause. Now the Supreme Court will hear the arguments for and against. If they continue to support the current administration, then that dollar is not going to last. We can't find anything to buy the dollar. Why would we want to buy the dollar? Why do we need the dollar? We here in the United States, yes. But outside, if trade becomes too difficult, what everybody's been dependent on buying from the United States, they'll go get it from somebody else. And those trade agreements will get revised and put in place somewhere else. Then what happens? So again, short term, medium term, long term, this administration, unless something happens to remove them, are in place until 2028. So we have midterms in 2026, and then the next election will take place and for inauguration in 2028. It's pretty incredible. It's pretty incredible. So again, there's a lot of time and a lot of damage can be done unless change is implemented. And we see that change. And that could produce a strong enough dollar rally. Now, again, I wasn't here to talk about the dollar. Different topic. Here, this, you can see 1, 2, 1, 2, 1, 2, 1, 2. And we're still in the minuet third. So we have got way more. I'm going to bring it down. Let's bring it down to the daily. And let's go upstairs and let's take a look at what we got. These are not unrealistic. I think when I put them up there, I was like, whoa. But we have numbers that take us above to $4,600 in gold. And that's on that cycle degree. The larger levels for that cycle degree, 4,600. You can decide how that's going to you can decide what's all going to happen to that. Right? So, but I'm saying if we're on the current track, those aren't unrealistic. 4,000 at this point is not unrealistic. And that's just why just all of this works its way out. So a lot more left to the upside. And as long as I can see 5 waves up and 3 waves down, the rally is still in progress. I'd have to see a larger degree finish the 5 waves and a much larger kickoff to that larger pullback. So right now, I have been suggesting longs in gold for a very long time, and they just keep them in place. It becomes difficult to actually, put them in place. It just really is difficult. We need to see resolution before we can start to say, okay, that top is strong enough, and now we're going to look for a much larger. And again, the market's going to kick it off. The market's going to tell us of our larger one. At this point, I thought, okay, if we suddenly drop $100 in gold, but that's nothing compared to what it's rallied. So am I looking for a one-day $200 or $300 drop in gold to kick off a larger correction, to kick off that we now have resolution somewhere and the dollar stops being sold and they step back in as buyers? Yeah, that would be one trade that would tell us. Are we going to see something with resolution in these trade wars? That could be something that could turn the dollar. So a lot of it right now is I'm looking at the dollar and all of what is inside of that. If I start to see that they're stopping selling of the 30-year bond and the 10-year note, and they turn that around and we rally, as we have in the past, recent past, where we had, the bonds were up 3, the 30-year bond, and the next day, smash. So again, here's what we got. So, any case, I think we just need to continue to just follow the patterns. Right now, upside resistance continues to come in. I need to put that one because that 5 is there. That's already there in place. If I take it out, I have to take it out far enough to get this guy. And that would be wherever that 4 comes in. So I don't necessarily want to put it in now, but I will. I'm going to go back out to the 5-year, and I'm going to pull this one, and I'm just going to go up to here. And that's just saying, all things considered, I'm going to that bottom. If it goes all the way down to it, what am I looking at? That's 34.64. That's if it pulls back now, 37. 35 to 37 would be just to finish this guy. The sub minuet third wave. And then we do a 4 in the, oh, actually we'd be finished, take that back. This puts in for wave 5 to finish the minute or minuet third wave. Sorry again. Gotta get my degrees. Minuet third wave corrected, and then we pull back again to do the minute third wave. And so we've got so much more to go. Right now, minute wave 3 should find some resistance at 35.09. But that means a lot has to happen in between, so it could be bouncing, bouncing, bouncing. And then that finishes up there or higher. I'm trying to stack it up, and it's a lot there. So gold right now, powerful. And if you're just day trading or even swing trading or just short-term trading gold, you keep looking for pullbacks until you see the news and affect what is contributing to, in a large fashion, to that rally in gold. All right, let's go over and look at silver. Silver's again also rallying. And I want to go out to that 3-week. So largest is that we're moving up in a C wave, an intermediate degree C wave. Inside of that, I'm feeling that that intermediate C wave is kind of unfolding in a diagonal. So it's forming a triangle. And we're in, hopefully right now, minor wave 5 of this diagonal triangle. So what does that tell us, or where can we get to here? Well, first up would be 36.58. That does take it above that high and above that high, and that's what the market would need to do. But I think if we can get up there, we probably should start to break even a little bit higher, and then we start getting into the intermediate degree resistance at 39.98, so 40 to 42.5. Kind of would fit, and that would also fit in here, where I think we can get above that. Our next level would be 42, just above 42. And so I think silver can, and if I take it out one more level, we start to see that, well, let me take it out all the way. So, all right, just bring it down. There you go. So we have all the way up to 46. And remember, what we're really figuring on a primary degree is a Y wave. So we have W, X, Y, and there's the Y portion of it. And so this is just the handle, the way that it's going up. And it's like if you look at a Y, right here, it's in reverse. So we're looking for this to just kind of form and to go. So it finds its resistance at 39.988, 42.656, and 46.969. So outside, yes. The primary degree can suggest that we go to new all-time highs, but something serious has got to happen. Something very serious has got to happen to push silver up to that level. And it would have to go along with here, and have to go along with here. And it could just be the downfall of the U.S. I hate to say that. I hate to say that. But it just could be that, just the dollar keeps getting smashed. The trade wars just keep digging away. The markets begin to just really heave ho to the downside. I think that silver could. And it would be a spike. I think we're getting into that area where upside can just go. We saw it here, we saw it here, and we saw the result. Why not? What's going to be different here? I don't think anything. So I think there's still upside in silver, but I have to tell you the risk is all that much higher because as we also see in silver, when they don't like it, they don't like it. This huge move in silver in terms of dollar value from almost 35 back down to 27. That's a $7 move. That's like, whoa. And silver's uh, margin requirements are through the roof, are through the roof. It's not the easiest market to sell. I mean, easiest market to trade in terms of margin. Because the margin requirement, even to trade it day to day, is huge. So this is actually for the professionals. If you're in there trading it, God bless you. But here we have, just looking for that 5, our initial resistance, right? Because it looks like we're getting ready to form the first 5 up, and that's not going to be completing it. I just think it could be minute wave 1 of minor wave 5. So if we're just finishing wave 1, then we got a 2, then we got a big 3. So you can see how we have the potential to get that stem of the Y going. So it's there. So 36, 58, 39, almost 40, 42, and then up to 47. And that could be enough to get that fifth wave done and to maybe complete the intermediate, because the intermediate degree, top side would be 47. All right, let's go over and take a look at platinum, which also finally looks to have completed the larger, I got to take this out to the 5-week. I'll bring it down in a second. So we have that A here. I did now put it in place, that intermediate B wave and so forth. In an intermediate C wave, here are the markers. Super rally, super nice rally, and would be expected to get above that C wave, which was reached in 2021 at 1,348. And 1,364 would certainly do the trick, but we could on that cycle, a primary degree, get up even higher. So let me go out one more and you can see what we're talking about. This is the big picture in platinum. Primary A, we're looking for a primary B wave, and we got the A and the B, so we're in that final intermediate wave C, 100% move, where C equals A is 1664. And then does that match up? It does with a 0.618. But that would just give us that primary B wave. ABC up, primary B. Now, yes, we have to allow for ABC, ABC for it to be more of a flat. If it's going to be more of a flat, although I don't, because it also is an ABC down, then the flat could take us closer to that 2,300 level. But here you have 21, we have 1935. So there's a lot of areas in between, but we'd be looking for something to get closer to the flat. And that brings us up into these areas. Now, this is the long-term chart. This is a monthly. This is 2020. We're into 2025. We're looking at 2025, 6, 7, somewhere out in here. So this is going to go on for a while. Now, bringing it back out of the rafters into this type of a picture, I think that we're still working. If this is the triangle within the triangle and both are now complete, that thrust should really just bring us back above 1,000. And we're getting close, 983, 995, then we're back above 1,000. And then I think we can push even harder. Now, seasonally, we are looking at things a little bit differently because there are other seasonal factors that show that the market should rally, but it rallies due to the fact that large users of platinum are in there buying for their needs for the balance of the year. That usually happens in January. It's now April, and we're rallying pretty nicely. We've seen strong rallies October to, well, that was all in October. This one was in May. No, that was in February. So we may just bounce around, get up and do a 1, then do a 2, then do a 3, then do a 4, then do a 5. So that would be good because looking for that C wave. So what we're looking to start with, a minor wave 1. And if I had to, I'd say this is minute 1, minute 2, minute 3, minute 4. We're looking for that 5. And then we get a minor 1, and then we get a minor 2. So it's going to be up, down, up, down. It's going to follow a 5-wave pattern. But I think the corner has been turned, and we should begin to see that continuation to the upside. Our next resistance comes in at 1,002. We have the daily 50 is at 984, 985. The daily 200, which is a little bit more, still kind of coming off of its going flat for so long. And that one is at, come on, 995. So those are the two blocks just before we pop and get back above 1,000. So I think on a good push, it could break both and be up there. But then you're going to look for a pullback, right? 1, 2, 3, 4, 5. Look for a pullback. All right, that's going to be it. Again, my main focus remains gold and somewhat silver. Platinum is just in there because it goes along with them as a precious metal. And so next update would likely be next week.